Hey everybody, we're back here with Opendoor Technology. I have some charts to look at. I'm going to look at the weekly, daily, 4 hour to 1 hour, everything for Opendoor Technology. It's been a while since we looked at it, so I'm going to do a rundown. And I have two pieces of news to look at and some remarks about Jerome Powell on what he said about the housing market. So we're going to look at the weekly chart like always. So let's start it. So here we go with the weekly chart, and we're still consolidating. Not moving up, not moving down. 2 weeks red, but nothing drastic. Nothing drastic on the chart showing a huge downtrend that's approaching. We are in a downtrend, of course, on a weekly and the daily chart. And also, I think the 4 hour chart as well. But today was a good day for Opendoor. It had a nice comeback. The pre-market looked good. And also throughout the whole day looked good as well. After hours, pretty steady around the 669, 668. $6.70. So not too much going on after hours, but overall a good day for Opendoor. The whole market in general has been selling off. So that's going to be an issue Opendoor. As I said before, even when a stock is good, if the market in general and overall is selling off, it's going to bring down all the stocks at the same time. That's why you see on the left side, everything's red after hours. Doesn't mean the stock is bad, the company's bad. It's just the market is having a sell-off. That's just how it is. Bitcoin, everything. So that's what's going on Opendoor. And you know the housing market isn't that great right now in 2025. The outlook for 2026 is supposed to be better. So that's what a lot of people are waiting for, 2026. So on a weekly, we're consolidating nicely sideways. Daily chart, we're consolidating sideways well, somewhat down, but today was good. So it kind of corrected the downward trend. Now, let's look at the resistance on Opendoor. Let's remove some of these lines so we can get a better picture on where Opendoor could go next. We have a support here at the 663 area. Then we have a support here at the 623. And the third support was going to be right here at the 641. Those are the areas of support we're looking at for Opendoor Technology. And resistance we're looking at is 707. And then the next one is going to be here at the 735. So that's what we're looking at for resistance and support. And we're somewhat below the middle area. We'd like to be up here around the 680 area. Hopefully tomorrow we can go to 680. We don't really want to go below 663 or the 640 area because that would mean a lot of the gains we had today would have been lost. But if that happens, it happens. Nothing we can do about it. Here's a little bit of good news for Opendoor. Housing market forecast for 2026 raises eyebrows. Is that a good thing or a bad thing? All right, let's find out. The National Association of Realtors has issued an optimistic forecast for next year, saying that home sales will jump by 14% in 2026. I expect higher home sales after 3 years of subpar performance and a sale gain of 14%. That's our projection, they said. Means more Americans will be on the move. That is from more inventory and from modestly lower mortgage rates. So more houses being built and lower mortgage rates. They're looking at more people buying houses because of that. More houses available, lower mortgage rates, and cheaper housing. With the combination of those three, we should see a nice fluctuation of people getting back into the market and buying houses again for 2026. But of course, some insiders are skeptical of such a big increase, and most experts expect a smaller jump in home sales next year. So we got to find out. It's up for debate. We don't know. We don't know what's going to happen. Pretty much they all agree that home sales will increase next year, but the disagreement is by how much. And pretty much this repeats the same thing. Lower mortgage rates and growing inventory across the country will bring back buyers into the market, leading to an overall 14% increase. That's what they're saying. And in my opinion, I think the same thing. I think housing sales will get a lot better for next year. But of course, it depends on the economy, the state of the economy. Are we going toward a downtrend? Are people struggling to find jobs? Is the unemployment rate good? That all matters. You know, people can't find jobs. People aren't making money, consistent money, or if they don't have a stable job because companies are downsizing for many reasons or because of AI, they're not going to buy a house. It's as simple as that, you know? So we got to see what's going to happen for the state of the economy as well. And one of the reasons why Opendoor could be having some trouble, Powell recently said housing market faces some really significant challenges that a 25 basis point rate cut won't resolve. So pretty much he's saying a 25 point rate cut that just recently happened is not going to help the housing market at all, for 2025 at least. Jerome Powell is suggesting that the country needs to build more housing units for the housing market to get better. and noted that central bankers don't really have the tools to address it. And this is what he said. It makes sense. Housing supply is low. Many people have very, very low mortgage rates from the pandemic period, and they kept refinancing and caught the really low. So it's expensive for them to move. And we're a ways away from that changing. And then he also says we haven't built enough houses in the country for a long time. And so a lot of estimates suggest that we just need to build more houses. So housing is going to be, a problem. And this is very important as well to understand the housing market and why Opendoor is trading the way it is. Jerome Powell says the bottom line is it appears 30-year mortgage rates will be in the current range for some time, barring a recession or a crisis. He also says the easiest mortgage rate declines may already be behind us. He's saying that the mortgage rates may decline some more, by a little bit, but not by a lot. The major decline is already behind us. So that's not good also. We want more cuts for the mortgage rate. So interest rates will be low. When we buy houses, right? The monthly cost of the house would be much lower, but he's saying it's already behind us. Not too much rate cuts are going to happen for now, but it could happen based on this scenario. And the scenario I'm talking about is a very, very weak labor market. Hypothetically speaking, if the unemployment rate were to spike and the economy weaken, financial markets could respond with a flight to safety, driving up demand for treasuries, which would push bond prices higher and yields, including mortgage rates, much lower. So if the unemployment rate skyrockets, the economy started weak, you're going to see very, very low interest rates for housing. Do we want the economy to weaken and the unemployment rate to skyrocket? No, of course not. But we do want some lower mortgage rates. And if that happens, people are going to buy houses like crazy. Opendoor going to go higher. Lennar going to go higher. All the housing stocks going to go higher. Construction stocks will go up much more. Home Depot, everything going to go up. So that would be good for the housing market in the long run if there's high unemployment, bad economy. For the long run, not the short term, because if there's high unemployment and a bad economy, it's going to lower the interest rates. But still, people aren't going to buy houses until the economy starts to get better again. So then you're back in this area where you're waiting for the economy to recover again. So that's how it is with these stocks, the housing stocks. That's the issue. When it goes up, it's going to go up like crazy. But when that's going to happen, that is the major issue. We do not know because it all depends on the economy. One last quick look at the chart for Opendoor. We broke two resistance today. We had one at 641 and at 663. Pre-market, we were at 630. So we broke this 641. We broke this 663. And now 663 is going to be the support for Opendoor Technology. And the resistance for tomorrow is the 707. But that's going to be the high resistance, right? The main resistance that we need to break and hold is going to be here at the 680. So if we can break that 680 and hold that area, then we can slowly make our way back up to $7 again. So look out for a 680 and look out for 663 tomorrow for Opendoor Technology. And let's hope, the stock market is in better shape. If the stock market keeps going down, Opendoor is either going to go down or trade sideways. If the stock market starts to recover again, we can break that 680, break that $7, and try to make our way back up to that 735 area where it's crucial area, 707 and 735. So thanks everybody for watching. Subscribe, like, and comment. More likes I get, I'll be back doing more videos. The more likes I get and more subscriptions I get, for sure. So take care. Have a good night.